HRA, FSA, HSA. It's very easy to get confused about these different types of medical insurance related types of accounts. My name is Brad Kingsley. I'm a certified financial planner, and I want to just take a moment here to help you understand the differences between these types of accounts. It's almost weekly that I talk to somebody about these different types of accounts and help explain the differences so they can make sure that they're maximizing their benefits. First, let's talk about an HRA. An HRA stands for a Health Reimbursement Arrangement. That's something that an employer would set up. The employer would fund that account. You would be able to submit receipts against that account, and then the employer would pay back the expenses of that receipt from that account that's in your name. At the end of the year, any money that's not used by you in that account is kept by the employer. It's employer funded, it's their account, they get to keep it if you don't use it. It's an employee benefit. Some places offer that, some places don't offer that, but that's what that is. The next up would be a medical flexible spending account, an FSA. So an FSA can be funded by the employer or the employee, or a combination of the two. Flexible spending account, similar type of thing. You're going to have money that's contributed to this account, sometimes directly deposited out of your paycheck, or it's going to be contributed by the employer. You can submit receipts against that. There's a couple of different ways you can do that. You would talk to your HR person about it, getting that money back, but they would reimburse you for those expenses, and you would be able to get them covered through that work benefit. That money is also owned by the employer, even the money that is contributed from your paycheck. That money is owned and controlled by them. So at the end of the year, you're going to lose any of that money that you don't use during the year. So actually, if you have a flexible spending account, you're getting close toward the end of the year, you see you have some money left, it's a great time to go out and get something taken care of medically. Something to be aware of, there is a possibility that depending on how the plan is set up, some employers can give a little bit of flex time, a little bit of buffer, say slightly into the new year, you can use some of the money, or a small amount of the money, say $500, you can carry over to the next year. But for the most part, you're going to lose any of that money that you don't use. So make sure that you understand how that's used, and make sure that you're estimating the amount you want taken out of your paycheck appropriately so that it aligns with the money that you're going to spend through that year and you don't lose out on any benefits. The third account, it's actually the most powerful, is a HSA, which is a health savings account. Health savings accounts are actually owned by the employee, or if you have your own insurance through the marketplace or something like that, it's owned by you still, not the employee, but just owned by you directly. It's your money right off the bat. The employer doesn't have any say about it. They don't have any control over it. It's 100% your money, so it's not anything that you can lose. Now, this is a common point of confusion because HRAs and FSAs have this use it or lose it type of setup. A lot of people assume that the HSAs do also. HSAs do not. In fact, you could maximize your contribution to a health savings account in 1 year, not use any of that money, the entire balance rolls over to the next year. It's your money, you can contribute 1 year, max it out, the next year max it out, keep maxing it out, and that account continues to build, and you never lose that money. It's your money 100% forever to be able to use for medical purposes at some point in the future. Now, whether or not you would want to leave some of that money in the account is a great question. It's one of the most powerful planning tools for health savings accounts, and it's something that I'm going to talk about in a different video or perhaps a blog post or something like that, because it takes a little bit more time to help understand the three benefits of a health savings account and how to maximize that to be able to take advantage of it and cover your medical expenses 100% tax-free, and potentially even use it for retirement savings planning in the future. So there you go. I hope that helps you understand the differences to those three different types of accounts, and just gives you some information to be able to make a decision about how to maximize those accounts if you have any of those three options available to you, to be able to maximize them for your benefit. Thanks.